We're news for business people.
Hello and welcome to Bloomberg Went Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Hi, I'm Agarwal, and in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for its investors. But first, the headlines. Benchmark indices advance, gain nearly 0.5% each, and pharma players lead the gains while FMCG players trade under pressure. And Dr. Reddy's gets an establishment inspection report from the US FDA, which reiterates that there may be more inspections at the Duvda plant, and the warning letter stands. Banks get March 2018 as deadline for providing against RBI's second list of stressed cases. And Uday Kotak tells Bloomberg that a bad loan cleanup was one of the biggest opportunities in his lifetime. And Reliance Industries raises $800 million from foreign bond market at the lowest ever yield offered by an Indian company.
All right, let's first take a look at what the markets are doing, and they're trading almost near day's high. Nifty is currently trading with gains of 0.5% currently, and you've also got Bank Nifty, which has been trading above the mark of 25,800. Well, at 10,350, Nifty is firmly trading above its 20-day moving average. Even the broader markets today are doing well, and that is clearly reflected in the advance decline ratio, which is firmly in favor of the advances, almost 2:1. That's the NSE stats there on your screen. If you could just pull up the Nifty contributors list, that will tell you which are the stocks which are contributing the most to today's gains. Clearly, the biggie Reliance Industries is contributing nearly 12 points, and all the pharma constituents in Nifty are trading in the green. But Sun Pharma is contributing almost 4 points. Bharti Airtel and the other heavyweight on the index, Infosys too, is doing well. What's capping the moves is ITC, which is dragging the index lower alongside your IT major TCS, Axis Bank, Power Grid are a couple of the other stocks which are not doing that great. But in terms of top three gainers, clearly the list is being dominated by the pharma counters. Dr. Reddy's, Cipla, Sun Pharma are your top three gainers. But besides that, you also got stocks like Bharti Airtel, which has surged in today's session. Remember, yesterday, Idea was trading with gains of nearly 4 to 5%. Today's the day for Bharti Airtel. And the other pharma counters, Lupin, that's also seen good gains of almost 2%. On the losing side, you've got a couple of stocks. Power Grid is the top loser. That stock seen cuts of almost 1.3%. The other stocks are Axis Bank and TCS, which are dragging the index lower. And actually, HCL Technologies is also down, followed by another biggie, Larsen and Toubro. What are you spotting in the broader markets, Agam?
Well, Navneet, some respite coming in for Anil Ambani Reliance Group stocks. So Reliance Communications, for that matter, is gaining up as much as 11.2%. It's back about the mark of 12 rupees a share, at 13 for that matter now. And some gains coming in Reliance Power as well, which is also looking at gains of around 3.5%. Among the other counters, there is an advance in movement when it comes to Apollo Hospitals. That's up 3.8%. And well, in the auto space, we are looking at gains in Apollo Tyres and Bharat Forge. On the losing end, there is some amount of weakness in L&T Finance Holding, and that's followed by, well, Berger Paints and Adani Enterprises, along with IDBI Bank. But the momentum again in today's day of trade, even in the broader markets, is clearly with the gainers. And we will be watching out for how some of these mid-caps fare as we move into the second half of the session.
And even the tea companies have seen a good run-up in today's session. Pull up any of the tea companies from the likes of, you've got McLeod Russell, Jayashree Tea, and also stocks like Rossell India have seen gains of over 10%. Jayashree Tea is up almost 4%. Rossell is up 13.5%, and also Goodrig Group, that's the other tea company which has seen substantial gains alongside stocks like Dhanseri Tea. So keep an eye on this pack. No news coming by, but there are some reports suggesting that the tea prices have inched higher by almost 15 rupees per kg. Well, on Trend Spotting today then, we discuss the benefit of logistics players getting the infrastructure status as we connect with Chander Agarwal of TCI Express. We discuss the stellar up move in Wakrangi this year and if there is more steam left there. And we also put spotlight on what's in focus and which are the buzzing stocks in today's trade.
Right, but Navneet, as you mentioned, I guess the biggest development today is that the government has granted the long-standing demand for the logistics sector, allowing it the infrastructure status. But how does this benefit players? And to answer this question and give us more details and perhaps a perspective, we're in conversation with Chander Agarwal, the managing director at TCI Express. Chander, thanks for joining us again. The first and the obvious question, logistics gets an infrastratus. What does it mean for the sector and what does it mean for a company like you?
So I think it's a very momentous occasion for us, for the logistics sector, to be recognized by the government as a vital economic contribution. The industry was always dwelling in the unorganized segment, always the majority was in the unorganized segment, and it was always hard for the organized companies like us to actually compete at a level playing field. So with this, I think there are going to be very stringent guidelines coming up to conduct business and to even along with the GST, where everything is very visible, everything is now in the black and white. Earlier it was in the gray. So the whole idea of the industry status giving it to the logistics industry with the GST kind of plays out for the development of the economy as such.
Chander, it's good to connect with you again, and clearly warehousing facilities have now been included under the infrastructure status, and I believe that's positive news for a company like yours. I want to understand what kind of impact can one see on cost of debt for you. If you could just tell us what's the current debt, because in the first half the total finance cost for your company stood somewhere about 1.25. To annualize that, it will be almost 2.5 crore. What's the kind of reduction in your interest cost that one can expect in the second half of this fiscal now?
So once the sector gets the industry status, the interest rates come down. And anyway, we are not a very highly leveraged company. Our debts are very nil on the books. But in case we have to go for bigger projects in time to come, then we would definitely avail these lower interest rates. And in general, I think logistics industry, the margins are very little. So getting this industry status will help in propelling the already missing information, or rather the missing lead, the link in getting the proper financing and execution.
Chander, clearly that's clear that going ahead, cost of financing for logistic companies will now be cheaper since it's got infrastructure status. But if you could tell us what's the current debt on your book and what's the immediate impact that one can see in the second half? If you could just, give us a ballpark figure.
We don't have any debt. We have close to only 30 crores. Yeah, sure. So we have about close to only 30 crores in debt, and that is something which is negligible, and compared to companies which are over leveraged, which are asset heavy. We are an asset light company, and that actually doesn't allow us to put much debt on our books. And I think even in the time to come, as the business grows, I do not see any change happening in that. However, if we are doing a big project where financing is required, perhaps then we would be requiring these low interest rate debts. All the new sorting centers that we are making, the world-class sorting centers that we are making, is financed by internal accruals. So I think that itself has showed that the GST, the unorganized players getting reduced, is actually increasing the legitimate business in India in transportation. And I think that's a very positive point for us.
Okay, Chander, you mentioned that there may be a possibility that you may be looking to increase debt, just in case. It depends on project to project. So then my question is, in terms of the company and its future, are you looking to enter new projects, something like cold chain solutions or pharmaceuticals or industrial parks for that matter?
So the road transportation business is a $300 billion business now, out of which 95% is unorganized and 5% organized is with us. So the opportunity in itself is huge, and I don't think this business will transform to the organized segment right away. It's going to take time, but I think with the current situation is going to have a multiplier effect. And that itself will show in our numbers as we grow. Regarding the debt, we do not see any big, large projects coming up, as I mentioned, because of the existing business potential. And anyway, we are an asset-light company. So we will not take on any projects which require extreme heavy funding of sorts. Just to give you an example, the current interest rate is about 14 to 15%. But we as a group get about close to 7%, maybe a few points up by 7%. By this industry status, I think this will probably be reduced to maybe another 6.5%, which I think is going to be very lucrative for any foreign company or even like local domestic companies to be investing.
Right. Chander, you pretty much answered my question that the cost of debt for a company,
yes.
The cost of debt for a company like yours maybe would come down by 50 to 100 basis point, but you've been emphasizing on the fact that you're an asset-light company, and of late there's been a lot of focus on the third-party logistic companies. With this move coming around, do you think the focus will now shift to from asset-light to probably on the other side of maybe asset-heavy companies?
I don't think so. The problem is that any country which has low infrastructure and the infrastructure is poor, when you build assets, it takes a lot of time for that asset, the return on the asset to, to actually give you that return. It's the high return. Like for example, our return on capital employed is about 46%. This is the highest in the industry. And it's impossible to get that if we have a lot of assets. Now, even with the 3PL, 3PL essentially is nothing but outsourcing. You outsource different aspects of logistics to different companies. A 3PL will never own any ships, any trucks, any warehouses, nothing of that sort. So I think with the poor infrastructure that we have here, when we own the assets, it becomes really tough to get that multiplier effect. And I don't see this changing in the next decade at least. So for any company to be agile and to be really strong in what they're doing, to give better returns to our investors, shareholders, it's better to be nimble and agile instead of building up these assets.
Chander, in our earlier conversation, you did speak of your share of B2C business coming off substantially from what it used to be. It is still a relatively smaller, portion of your revenue pie. But my analyst who tracks your company in-house, he was curious about wanting to know what your plans are with respect to B2C, or will you continue focusing on B2B?
So B2C is changing dramatically all over the world. Now, if you see what's happening in the US, the Amazon, and even in say in China, the Alibaba, what they're doing is they're moving from online to offline, which means that they're also owning stores. Now, that's a very unique thing because in India, e-commerce has really not picked up, and when it did pick up, we saw that after demon it really crashed, and after GST also it's come down, it's not picked up. So in a way we're in a good position because we're not leveraged at all in B2C, and we're not heavily leveraged also. So I think in the long term we will have a very stable approach to it and stable growth. Now even a large company in India, one of the biggest companies in India, they announced that they will be going to an offline model of through their mobile network. Now that's a very unique thing. That's pretty much what Amazon is also doing. So I think a lot of things will change, and India is on the cusp of change. It's never had any stable e-commerce platform, for consumer changing from Kinara stores to online completely.
Right.
So looking at that, we're playing a very balanced, we're having a very balanced approach and not really jumping the bandwagon.
All right. Chander, before we wrap this conversation, I just want to understand, besides cheaper financing with this infrastructure status, Are there any other benefits that will, come for the logistics sector, maybe in the form of tax benefits or something?
So I think one of the biggest benefit that we will see happening is that once you have the GST in place and then you have the industry status, what I understand is that overall the cost of operating, which is the cost of operating would come down, and the cost of operating doesn't mean that the price of transportation will come down. It would mean that the cost of fuel will come down. Now fuel is like 50% of our cost, and if that through these means actually can come down, will be the best thing that can happen to this sector and the economy in general.
Chander, Agarwal, it was a pleasure speaking with you. Thank you very much for speaking with us and telling us about the implications of the new status on the sector as well as the outlook on your company. But we move on to the next trend, and this time it's going to be a company. Vakrangi has seen a stellar run this year with gains of as much as 156% so far. And what has added fuel to the rally, we've seen a lot of changes in the company as well. Not only have we seen a 156% gain through the year, but just in the last 1 month, it has also moved up by, well, nearly 30%. Well, there you have it, 29%. And this is on account of a lot of brokerages coming ahead and, giving it a thumbs up in terms of changes. Now, we intend to understand what's going right with Vakrangi and perhaps some challenges. And for that, we are in conversation with Avinash Gorakshakar, the head of research at Joindre Capital. Thanks for joining us back, Avinash. Firstly, I'd like to start with, we understand that Vakrangi has a whole host of products and services. But according to you, what is it that the street is factoring in what segments of Vakrangi are likely to drive growth as we move forward into the next couple of years?
Yeah, good morning, Agam. I think frankly, Vakrangi is a large player operating in the financial inclusion space. And I think now the key driver for Vakrangi going forward in the next couple of years is largely going to be its Vakrangi Kendra, that is, the e-governance business, basically the e-commerce platform which they have built along with the public sector banks. Because as per the RBI rule, every bank has to allocate at least 25% of its branches in unbanked areas, and that is where these Vakrangi Kendras come in. The company is targeting about 75,000 of these outlets by FY20, and they have already set up roughly about 40,000 outlets. So these outlets are going to actually do a lot of financial inclusion as well as financial service related products through this network which operates across 17 states. And to encash on this network, they're also looking at building a logistic kind of business, which will be the next driver. I think the logistic business, revenues as well as profitability will take off after FY19. But the same network is going to be used for the logistic model, and for which, company has made decent investments. So I think markets are definitely gung-ho on this logistic business taking off now with logistics, getting a infrastructure kind of status, and obviously the opportunity being huge. And finally, the third important driver in the medium to long term would be, they want to replicate the same Vakrangi model in urban areas, coming in with a slightly more premium kind of Vakrangi, format. So I think these are plans on the drawing board, but definitely the first two, that is basically the logistic business as well as the Vakrangi, center rollout, is going to be the key driver, for the next couple of years.
Avinash, I'm just looking at the multiples. The stock has definitely given good returns this year. It's up almost over 150% or something, but it's trading at almost 50 times to its FY18 earnings. At these levels of above 700, do you think one should make any fresh investment into this stock?
See, I think clearly, the stock has moved up quite significantly, as Agam pointed out at the beginning of the show. But if you look at the business model, they are one of the unique players, which have a very strong network across 17 states. And it's very difficult for any other Indian player to actually replicate what Vakrangi has done. And that is probably the reason the markets are willing to give a very high multiple. The stock now currently trades on a cum bonus basis. They're given a 1:1 bonus. So my sense is probably once the stock goes X bonus, Navneet, that would be a good time to accumulate, because, we could see earnings growth growing by at least 20 to 25% over the next couple of years. And frankly, the historical multiple as well as the 1-year forward multiple may look a little bit expensive, but if you look at the opportunity, I would believe that these stocks would definitely get a strong flavor, because now with a institutional as well as an FI holding in excess of almost 30% this has become a stock which is being eyed by even the institutions. So any fall is being used by them also to buy the stock on a fall. So I would believe that a dip can definitely be used to buy the stock. Currently, the stock definitely looks fully valued.
Okay, so Avinash, according to one report that I have of Joindre Capital, that suggests a target of 640. Of course, the stock is well above 700 right now. So you're saying that you will evaluate the target as well as your future valuations after the bonus will come through?
Exactly, Agam. I think, our target price has already been achieved. And I think clearly now going forward, what kind of management commentary comes on the logistic business, what kind of commentary comes on the for future rollouts, especially the Vakrangi formats, in the urban markets, because these are near-term triggers which the markets will evaluate, because these are going to generate incremental revenue. The existing Vakrangi format is more or less well established. And one more interesting point is the company is completely debt-free as of FY18 first half. So, that additionally, puts a strong kicker to the earnings, which was not there last year. So I would believe that, yes, I think probably, we'll wait for the third quarter numbers to come out and then probably, put in our numbers for FY20. And looking at the way the market is reading, I would say that, once the stock goes ex-bonus, it could again get into a little bit of, acceptable kind of price entry point. So that would be a time where we could possibly reevaluate and give a fresh target.
Okay, so Avinash, you earlier also spoke about a certain moats, that some certain competitive edges that Vakrangi has over any other player which wants to enter. Can you once again elaborate a little more about what these moats are when it comes to Vakrangi specifically?
See, I think my sense is, Agam, already, as you must be aware that, financial inclusion has now taken off in a big way. In fact, they are using the same network which they have built, that is these Vakrangi Kendras, to sell a multiple range of products. They have entered into a tie-up with Amazon. Now, Amazon is clearly one of their prime partners, and they are very happy with the kind of progress, because e-commerce business definitely has some problems in getting into the interior parts of the country, which Vakrangi obviously has an edge. I mean, in places where possibly even the postal codes don't exist, or maybe, where parcels cannot go, that is where Vakrangi has made a headroom. So I would believe that the one part of the strategy is to, see what kind of multiple returns can come in from the Amazon venture. And secondly, as I mentioned earlier, that, India is a vast country. We still have a lot of people who are completely unbanked. And with 17 states already, already seeing the Vakrangi outlets, this is one geographical kind of advantage which the company enjoys, which no other Indian or MNC company can match it, as of now. So I would believe that this is a significant moat which can help the company to sell across cross range of products. They're already selling insurance, they're already selling mutual funds, they're already distributing DTH products. So I think across the product base as well as the customer reach, these are two things which could multiply quite significantly over the next, say, 3 to 5 years.
Thanks, Avinash, for giving us that great insight into this company, Vakrangi, which has been going up. In fact, in today's session also, the stock's seen gains of over 1%. In the last 3 months, it's up over 50%. Well, let's move on. The Reserve Bank of India has set a shorter deadline for banks to deal with their exposure to accounts mentioned in the second list of stressed assets. Bankers have told Bloomberg Quint that they provide for these loans by the end of March next year. Vishwanath Nair, who spoke to these bankers, joins us now on the phone line. Hi, Vishwanath. Does that mean we will have to see higher provisions from these banks in the second half of this fiscal?
So that's right. A part of the bankers, some of the larger guys like a State Bank of India, they've already started providing for the second list, as well as Union Bank of India, who completed their entire provisioning requirement for the first list by the first half of the financial year, so they can fully focus on the second list in the rest of the year. What these bankers seem to suggest is that the accelerated provisioning cycle, which started with the first list in June, that is now getting extended to the end of the financial year. But after the end of the financial year, they will not have much to provide. May not be needed to provide much for the stress on their books, and they can focus on the growth and the other parts of the banking business, so that they can have a cleaner balance sheet and a healthier balance sheet in the next financial year.
Okay, well, Rashid, thanks for that. We will be giving you more updates with respect to that development. But moving on, we're also going to take a look at all the buzzing stocks for now. And we are once again joined by Yash Upadhyay after a very, very long time. Yash, what do you have for us?
Well, good morning, Agam. So, clearly the benchmark indices are up about 0.5% as we talk, with the top gainers being Dr. Reddy's, Cipla and Sun Pharma. So the pharma pack is up, while the top losers make up for Power Grid, Axis Bank and TCS, which are down anywhere between 1.5% to close to 1%. While all the sectoral indices are in the green, barring Nifty FMCG and the Nifty PSU Bank Index. So addressing a couple of gainers, we have Simplex Infra gaining the most in over 5 months today, up close to 14% after the company said that it had won an order close to 500 crore rupees from NBCC for the construction of building for its IIT Bhubaneswar and its extended campus. Also, we have BCL Industries, a largely small company with a market cap of close to 160 crores, which is engaged in the business of edible oils, locked in an upper circuit of 5% after ace investor Porun Juveliat bought close to 2 lakh shares in the company, along with EQ India Fund also buying about 4.5 lakh shares yesterday via bulk deal. And also we have Saturn Credit Care Networks. Now this one gained for a 4th consecutive day and was up close to 16%, the most in over 5 months after the company's subsidiary received the regulatory approval to start the housing finance business. And lastly, addressing some of the stocks which are buzzing on heavy volumes, we have L&T Finance, Thermax and Whirlpool of India, all with volumes being more than 35 times for this time of the period.
Thanks a lot, Yash, for that exhaustive list of stocks which are making moves in today's trading session. I just want to add a few more stocks. Pull up the intraday chart of HDFC Life. It's seen a sudden spurt. Remember, this is a recent listing and the stock has now seen gains of almost 11.5%. Yash has already highlighted Simplex Infra, but you've also got stocks like ARSS Infra, Merck Electronics, which has reacted positively to its September quarter earnings. Merck Electronics has seen good gains coming about today. ARSS Infra up almost 12%. And lastly, I also want to highlight Moltech Packaging. That's the other one which has seen a bit of buying momentum coming about. Moltech Packaging is seen gains of almost closer to 2.5% right now. Okay, I think we'll have to cross-check that chart because the rate on NSE is showing a different tick. But I guess on that note, we'll have to wrap it up on this edition of Trend Spotting. Thanks a lot for watching the show. Don't go anywhere. Coming up next is Hot Money. Stay tuned to Bloomberg Quint Live.
Are we live?